name's Stephanie and I am the Senior Mortgage and Protection Broker here at Kelowna Financial. And today we're going to talk about what a lot of people can tend to shy away from sometimes, and that's protection. So within protection there are a couple of different elements, different parts are suitable to different people, but that's the beauty of protection. It's not an off-the-shelf, ready in a box, here you go. You can really tailor it to what it is that you want and what you want to achieve from this plan and make sure it supports you in the way that you need it. So within that, there are a couple of different types of plans that are available. What we'll do is we'll run through each type, and then as I say, we can have a chat and see what one's going to suit you best and what's going to suit your family. So the first type of protection, and probably the most commonly known one, is life insurance. Now there's a lot of rumours, a lot of myths when it comes to protection as well, and again we can put some of them to right. So for life insurance, as I say, it's the most kind of bog standard, ready to go, no bells, no whistles. If you pass away, the plan pays out, and that's as deep as it gets. There's not any kind of other frills along with it at that point. If you are just looking at a very, very basic life insurance plan, it can be cheap as chips, £5 a month, something like that. It doesn't need to cost you the world, but it's going to ensure that if anything happens to you, that your family are going to get that payout to help support them through funeral costs, paying off debts, finances, clearing mortgages, things like that. Now with life insurance, what will happen is if you were to pass away, it would pay out to your estate or it can pay out to a trust. If you set up in a trust and you've not got a will or anything in place, it basically bypasses all of that and makes sure the right money goes to the right people at the right time. There is a lot of common myths online. There is a lot of information online that says that legally you have to take out life insurance to get a mortgage. It's not true. You don't have to. Legally the only insurance you need with a mortgage is buildings and contents. However, life insurance is going to protect you, it's going to protect your family and make sure that no one's getting put out of the house if someone was to pass away. The next type of insurance we'll cover is critical illness. Now this name varies slightly depending on the provider, so some call it critical illness, some call it serious illness, but in all essence of it, it's the same type of plan. If you become critically or seriously ill, you will receive a lump sum of money. Now for this, the main types of illnesses that are covered are kind of cancer, heart attack, stroke, but there's a lot of other ones that are in there as well. There's also other conditions that you can add on to the policy as well, so things like total permanent disability. So if something happened and you were to become completely and permanently disabled, again the plan would pay out in that instance. For this type of plan, it can be a little bit more expensive because it's more likely that this will happen to you than if you were just to pass away. And again, for this, you do need to be critically ill. It's not just a case of you've had a heart attack in the morning and you're back out at 2 o'clock in the afternoon. It does need to be a specified severity before you will receive that lump sum. Now for this lump sum, because you will still be alive, it would pay out directly to your account and it's up to you what you do with that money. If you want to clear off your mortgage, you can do. If you want to make adaptations to your home, again, you can do that. And the amount of cover, again, it depends on what suits your budget and what you're going to use that money for. You might want to cover 2 years of mortgage payments or your annual salary for a couple of years. You could set it up that way, or if you wanted it to clear off your mortgage, you could do that too. Now with life and critical illness, you can combine this plan together. So that means you would have one monthly premium, but the policy would only pay out once and then it would just stop. So if you claimed onto the critical illness element, you would receive that lump sum and there'd be no further payments under the plan. You could also have it jointly with another person. So if me and my partner had the policy, again, it would pay out once and then it would stop from there. You don't necessarily need to put it in joint names, but the option is there if you wish to do so. One of the lesser known types of protection you can get is essentially what's your own personal sick pay. So it's called income protection, and as I say, this steps up when your employer doesn't. You might have no sick pay in place from your employer, you might get a couple of months, 6 months, a few of them still do that. But this plan essentially is going to provide you with a monthly benefit in the event that you're too ill to work. Now with income protection, it doesn't need to be a specified illness. You could be off for anything at all. If you were, say, a football player, you broke your leg and you couldn't play, it's going to pay you out. If you were off with something mental health related, again, it will pay out in that instance. And again, if it is one of your horrible, nasty cancers, heart attacks, and you are off your work, it will pay you. Now for this type of cover, again, there's a couple of different options based on what's really going to suit your budget. The gold standard, kind of best one you can get, is what's called a full benefit. So that basically starts when you go off sick, and it will run all the way up to the end date of the plan, which you could have as like your retirement age, for example. Now with this, it does cost a little bit more because you could go off in year 1 and you would never have to go back to your work if you were unable to do so. If you wanted a more kind of budget friendly option, there is limited benefit periods. So it'll pay out for 1 year, 2 year, and some plans will go up to 5 years as well. Now for the income protection, you can claim on this an unlimited number of times. It's not like a one and done with your life and critical illness. If you go off in year 1 and then you return to work, and then you go off in year 6, 15, you can claim on that plan again. Now the plan premium can be set at the start, so it doesn't need to increase while you're going through that period of time either. With this type of plan, you're not going to get that big lump sum payout. You're not going to clear your mortgage off all in one go. But what it will ensure is that your mortgage is paid every month. It'll ensure that your rent's covered, that you are getting your bills paid, your council tax, you're not falling behind anything there. Now for this, the monthly benefit you receive is going to be a little bit less than you get in your normal wage packet. And the reason for that is because they need to give you an incentive and a reason to go back to work. If you earned more on the plan than you would work in, most people would choose not going back to work. So for that, it's not designed to take you on lavish holidays. It's not designed to buy you brand new cars. This is to cover your income essentially in that period that you are too unwell to work. So your mortgage or your rent will be paid. Your gas and electric is paid. The council won't be chasing you for non-payment of your council tax. It's going to ensure that we can cover off all those major ones and you can keep a roof over your head while you get yourself better.